you separate the market cap, futures is maybe 85% of the pie. Really, I would say barely between 40 and 50% of the flow are users in the prop firms right now. So,
whoa, because to me it seems like on the marketing side, it's also a challenge. There's so many firms that are competing for these traders.
I think it's the best program because it's easy to game, maybe.
Hi everyone, welcome back to another episode of FinanceFeeds Podcast. If you like our content, don't forget to like and subscribe and comment on our videos. Joining me today is Ruben Abitbol, who is founder and CEO at RUBIK Prop Firm Consulting. Ruben, welcome back to Cyprus.
Yes, thank you for having me, Nicola. I appreciate the invitation.
Thanks for taking the time out of your busy schedule to come speak with us. I think you are a very valuable speaker for FinanceFeeds because you have a storied background, I would say, in the prop trading or really in the online trading industry, but more focused on prop. And you've held senior positions at a number of firms who are quite popular brands within the prop space. So it's very interesting to get insights from you today. And you recently wrote an op-ed piece on FinanceFeeds, and I wanted to start off by asking you about some of the things that you had mentioned in that article. You know, like, for example, most retail traders still see prop firms as trading businesses, right? You argue that many firms became challenge selling businesses instead of the other way around. And I wanted to ask you, when do you think that shift actually happened? And how much of the industry today really depends on really the pricing of challenges? Because it kind of seems like that's where kind of the industry went, and kind of we're at this sort of strange spot.
Yeah, that's a good question.
Mm-hmm.
The industry is evolving very dynamically in prop firms, much more than brokers, because it's a new way of trading, I would say. We need to come back a little bit back in the years to understand the history of prop firms first, to understand where the shift happens. Regarding my background a little bit before, because I'm coming also from the prop firm industry, but traditional. I was trading options in the desk, but the traditional prop firm desk. So I wanted to continue my journey in the prop firms, but it happens that the industry is no retail, very retail, online, rather than institutional for prop firms. So that's how I moved directly to the Fivers, which is one of the pioneer in the space. Very early stage, I would say. It's maybe 6 years ago, so 2021, when there was only few companies. At that time, there was the Fivers, FTMO, Top Step, which are today one of the biggest name. Top Step is now in futures. FTMO is in CFD.
Yeah, sure.
But when during the early stage, the goal was really to find talented traders. That was the goal from the beginning. So from a very intuitive way, you set a challenge, hard challenge. You set the rules. If someone passes the challenge, you need to be smart enough to trade on the live market. But very quickly you understand that because you decrease the barrier of entry for traders, it's become a public type of become more wide, and everyone can jump on this opportunity. So you also get beginners, you also get people that want to learn trading, and you are not attracting, I would say, profitable traders or traders that are extremely professional. So that was at the very early stage. Few years later, I would say 2023, you understand that you cannot focus the business on looking at the right traders, because the odds will be, 99% of the traders are beginners. It's very hard to go with the market with them. They are inconsistent. So they will make money for a specific amount of month, but that after that they will end up not being profitable. So the shift happens when a lot of companies entering the prop firms industry, and then all of the buyers drop down even more. Challenges were easier, price dropped, and then you understand that it was more like a challenge selling type of industry. We'd say more gaming rather than trading at that time. Yeah, that's more or less the history back in the days.
And that's sort of where we are today, right? I mean, at the end of the day, I think I saw somewhere somebody published a pretty humorous sort of chart where it's kind of like launch a prop firm, start selling challenges, realize that your challenges are too expensive, lower the price and drop the price, then that eats into your bottom line, into your revenue, right?
Yeah.
Then you have to you have to get rid of some groups of traders, right? Kind of reset, right? Then you raise the price of the challenges again, and then it's just a never-ending sort of loop, right? At the end of the day.
Yeah, there are some firms that do a very good job on putting a lot of effort in education and building communities. So this is all you can really separate between the strong firms that have communities, founders that are not hiding, and they want to push traders to learn. They want to push traders to trade with them because it's the product is still an amazing product. Today, the market need to be more mature, both sides, prop firm but also traders.
Yeah.
That's something we're going to talk about. So we were talking about challenge selling points. Today, I don't think firms are profitable by putting traders in the live market. And I think a lot of firms take the stand of saying the live account is a simulated live account. So they know that they trade on a simulated, even they pass the challenge. On the background, there are some firms that try to hedge and to protect the exposure, but it's a hedge cost. Okay, so you need to understand that payout ratio today on average is really high. If you start trying to detect the good traders and then have an edge cost, so you even more diminish the margin. So the balance is really hard to find with all the competition. You need to drop the price, like you said, with the challenges. The challenges are also easier. So yeah, that make actually the prop firm really hard this time, especially in CFD. But there are other instruments as well that are coming on that we are going to discuss.
You're talking about like futures and in some ways options, because I've seen quite a few what I would call traditional prop firms that have been around for 5-6 years that are venturing into futures, and they're either launching a separate brand to offer futures, or they're just extending their existing offering to tell their traders, hey, you can also try challenges that are based on futures markets.
So futures is another instrument. I think everything starts with CFD, and then some firms and Top Step did the first step to move into futures. They basically left the CFD and entered futures, which was a very good move because you attract US market. And today, if you separate the market cap, futures is maybe 85% of the pie. CFD is still stagnating. Futures is growing a lot. It's a different business in US. Different transparency, different rules, different type of traders. I think traders there are much more experienced than in CFD. And then you have a crypto, which we see already Kraken about breakout, which was the first announcement that crypto will also be an instrument in the prop firms.
Okay.
And we're gonna move into prediction market very soon. I see already some firms entering this niche. So prop firms on prediction market. There is one prop firm trading offering options, but it's less. Though you have stocks as well. Trader Pool have stocks, which is the Fiverr sister company. Option, it's still really hard because options is much more complex. So you cannot attract retail traders to trade this instrument.
If we go back to, not go back to, but if I look back at some of the things that you also mentioned in your article, again, one of the topics that I wanted to discuss today is there's certain things that are happening on the prop firm side, but then also on the trader side that are impacting this part of the industry. And I think you mentioned things like reverse hedging, payout cycling, synthetic exposure structures becoming more common in terms of actions that prop firms are taking these days. I guess I wanted to ask you, like, without revealing any sensitive information, because I know you work directly with prop firms, what are some of the, like, maybe smartest or sneakiest things that sophisticated, let's say, traders or groups of traders are actually doing in prop firms when they're opening or they're participating in challenges and trading that none of us even realize is happening today.
Yeah, I will start coming back a few years ago again, like 2 years ago when we had the challenges. We expected the traders to trade on a discretionary mindset. So being able to understand the charts, having some analysis, execute based on specific triggers.
Yeah.
Today, when a prop trader that is in the market for a long time, he will look at the rules and try to play the statistical game of passing the challenge without looking at the market itself. So it's more like statistical and systematic way of passing the challenge rather than having a trading experience or trading knowledge, which basically prop firms were set to find traders based on understanding the market behavior. And group of traders tried first to play the statistical game. There are different strategies to manipulate or bypass the rules. I'm also saying offsetting the risk, because now you have a lot of options to trade prop firms, and there are inconsistencies or there are inefficiencies in the industry where you can very easily, the first thing you can think is going long in one firm and going short in another, which something that is happening a lot. And I see today more and more firms that try to collaborate and coordinate to understanding these patterns and flag groups, but it's too wide. It's really hard again to detect that because you don't have any shared database or anything. I know some companies are trying, and some tech companies are trying to be the third party, understand what's going on, but most of the time it's really hard to detect. There are a lot of others patterns that we are detecting inside the firms that the main goal is to bypass the rules. So they are here only to enter quickly, take money quickly from the firms, and this type of strategies are not profitable long-term in the real market. So even the companies say, okay, this guy is really good, he's get a lot of money from the company on a simulated environment, and then we want to put this guy on the live environment, he will end up losing because it's not, right? It's not a discretionary approach of trading. I like to say the Russian roulette party, because if you have 4 firms, 3 of them will basically lose the challenge, one of them he will pass the challenge, and then he will make the cashier. So the prop firms that are competing with each other, it's like a Russian roulette. Because if most of the cheaters start to win in a specific firm, they will get in trouble. So it's very random to offset the rules. So that's what I said about the firms. So I think the industry need to be responsible in both sides. Firms, of course, need to have more transparent rules, more traders friendly sometimes. But in order to achieve that, the traders need to understand that if they start continuing bypassing the rules and create some strategies only to game the system, so it will not happen, and then there will always be this friction. So responsibility need to come from both sides.
I think you make 2 very important points. One of them echoes a lot of what has been happening historically in the retail industry. You've always had bad players and syndicates of traders who are doing bad things in retail. It's just here we're talking about challenges. There you're actually talking about live markets where they're basically trying to, game the live market, and try to take advantage of retail brokers in one way or another. I think the other important point that you made is kind of, these traders are only there to try to cheat the challenge, right? And that doesn't make sense to me. And I think you mentioned this in the long run, because, okay, so you're going to cheat the challenges 5, 10 times, 20 times, but you're never actually going to become a real trader in the real sense, in terms of like having capital to put into a real live account and actually make like real trading decisions where, for example, what's going on in gold and oil right now, you know what I mean? And like open, let's say 10, 20 lots of gold in one direction and see what happens, you know what I mean? With like real funds. You're never going to become that way. And it seems like, frankly, you could, people can get upset at me, but I think that that's kind of cheating. You're just a cheater. You know what I mean? You're just there to play a video game. And it actually, this reminds me of video games. Like I personally was never good at video games. I think because my parents, when I was little, they were like, no, I'm not going to buy you Sega Genesis when all my friends had one. Okay. But when I did play video games, I was so bad at them that, and this is, I'm admitting this, I went online and I was like, okay, give me the cheat codes. Like give me so that my life or whatever, my health, if it's like a role-playing game, that my health stays 100% and I don't die, because I was so bad at them. You know what I mean? Yeah. But I was like, let me cheat. But I would play those video games literally for 30 minutes and then I would lose interest, because I'm like, well, I'm not really doing this genuinely, you know what I mean?
Yeah,
and I'm like, this is not my thing. I'm done. I don't need video games anymore.
But prop firms is lowering the entry to trading. So there are a lot of, I would say, countries that can be like in higher poverty. They are not trying to cheat, to just enjoy and then try to win, but they are trying to maybe gain specific money to be able to have a more comfortable life. But again, if everyone start doing this, so you basically kill the system. Yeah, so I would prefer that people still start to train themselves on being a good trader, and then they can really take advantage of the prop firms on a proper way. Which again, I think it's one of the best innovative product in the fintech for retail during the last maybe 5 years.
And I mean, I think if we go further, okay, so, traders are doing these kind of things, or let's say syndicates of traders are doing all of these kind of things. And at the same time, they're complaining that prop firms are delaying payouts, right? They're becoming stricter. They're adding surveillance in a sense. So they're looking at what traders are doing exactly, where they're entering, exiting the markets and things like that. Or sometimes they change the rules, the challenge rules, right? Obviously traders aren't happy. But I think, I guess my question to you is, how much of that is bad firm behavior and how much of that is a normal, natural reaction to bad actors, and basically trying to, on the one hand, what I would call protecting market integrity, because at the end of the day, it's still a market, right? Sure, it's a simulated live environment, but it's still a market, and you're still working with a company that has employees. You're still working with a company that provides a service, right? And things like that. And at the same time, it's based on financial markets that have existed many, many years and will continue to exist even if prop one day disappears or becomes something else, right? How much do you think of this is bad firm behavior or a natural reaction to what's going on with traders and what's going on with sort of the sophistication of traders trying to game the prop firm?
There are many operators that come to the space with a healthy mindset to offer different type of challenges, innovate in the market, but they're attacked by groups. So most of the time, companies that are not successful, they aren't successful because also from their misunderstanding of the industry, lack of experience, lack of understanding in risk management. So it's not all the time, because there will always be abusers, like you said, but you need to have a team that know how to handle with them. And then you'll be able to survive, to manage. But the companies are still very young to understand how to manipulate and how to tackle this type of flow. Just to understand, because we are talking about abusers and toxic flow, what is the percentage of this flow coming in prop firms? It's quite a lot. Really, I would say barely between 40 and 50% of the flow are abusers in the prop firms right now. So
whoa.
Yeah, that's what I would get.
Wow.
The thing is that firms are all the time evolving and adjusting the rules to diminish this pattern, diminish this bad behavior. So they all the time, they are fighting them. If prop firms are fighting themselves, you have to all the time find a middle ground, or I can have a model that whatever you do, you will be good. We will not find you as a toxic behavior. So there are some firms that change the rules and adjust the pricing because they first it's a competitive market, so you have all the time new firms coming on with a lot of money. They take the marketing, your revenue drops, and then you need to find a better way to keep your margins healthy. But I would say it both. First, the rules are changed because of the toxic flow and because of abusers that all time try to find the exit door to get money on a bad way from the company. But also sometimes some companies are more greedy to make the rules harder or to change something, lack of transparency. But again, like I said, it's a combination of both parties that both need to be responsible. I hope we're gonna achieve this type of mature market in the next years. Yeah, because we need this product for traders that want to be profitable and want to learn on the lower cost. Because in the brokers, it's basically the good alternative for the broker to not deposit.
I think also a lot of people see prop firms or the prop firm funnel, I would call it, as a lead funnel, because it's a lead funnel for, like, if those traders go through a prop firm experience and they are in one way, shape, or form successful, or if they don't, just drop out and they continue to do challenges, in my mind, there's a likelihood that they'll open a real live trading account at some point later, because they already have they're already getting some experience in trading, right? Again, that's maybe not something to discuss in our discussion today. Okay, I think that could be an entire podcast episode.
To put online,
how kind of how companies in our industry are perceiving that and using that, right? Because we know brokers that have been traditional FX brokers started their own prop operation, and vice versa, right? Prop firms that would open up a brokerage arm, right? Yeah. And we could obviously debate and discuss why they're doing that.
Regarding that point, I think there is still a gap between prop firms being a lead funnel for brokers. I don't see any brokers being bigger because they open a prop firm arm. I think it needs to be two separated type of product. Today, it's still hard for me to connect both in terms of like funnel and user acquisition. But again, today, if you want to open a broker, open a prop firm, you will go to the prop firm because it's a lower barrier to entry, easier to get marketing, etc. So, and again, if you want to enter a prop firm today, and you you need to do it from an instrument that is not in the red ocean. Okay, you cannot start today. If you start opening a prop firm in CFD, which you have 100,000 of firms, you are battling a lot. Competitive is really hard. So you can be successful if you have the right methodology and the right experts in your team to be able to compete. But if you're alone, you will likely fail. In futures, it's the same. Quality market, you have top 5 names that are taking everything. Crypto is starting to be a little bit more attractive. So today you will see, I think in the next few months, you will see more crypto prop firms entering the market because again, it's a less crowded instrument. And then I would think prediction market is the next step.
Yeah, well, prediction is something completely separate. I think you're speaking on a panel, I think tomorrow or Thursday, right? At IFX about whether or not it's going to take over and swallow prop, right?
Yeah, exactly.
But we'll leave
it's
that.
So different. That's something we're gonna leave for the panel.
We'll leave that for the panel. Yes, of course. You mentioned earlier in our conversation today your experience at the Fivers. You worked at that firm, and then you afterwards, you and I spoke. You also analyzed firms for a website called Prop Firm Match. So you have a lot of sort of experience in analyzing prop firms, and we touched on a bunch of things. And you mentioned a bunch of things that have happened over the last, let's say, 3 to 5 years within the space or within the industry. But I wanted to ask you a little bit more specifically about kind of what do you think has changed in the last 3 years in terms of sort of firm economics. I think you touched a little bit on that, and then the marketing aspect of it, and also the sophistication of risk management. Because you just told me let's say 40 to 50%
Yeah.
of trade flow is toxic. That seems insane to me.
Yeah.
On the one hand. On the other hand, you mentioned this also, and things come to my mind. There's so much competition, price competition in this segment of the industry. How are firms surviving? You also mentioned, sometimes firms may become a little greedy in terms of how much they charge. But isn't that, I guess my question, isn't that maybe that's a reaction to, again, economics? They're just like, oh my God, we need to change things. We unfortunately need to charge more in order to maybe not even stay profitable, but to stay afloat.
When I mentioned that firms are greedy, it's what more related to the rules, not to the price. So price, of course, is a reaction of the dynamics of the margins. But I mean, they are greedy. It's more like in the rules that they put rules extremely hard.
Okay.
That's sometimes really hard even for good traders to achieve profitability. So I was in Prop Match for more than a year. They are actually doing an amazing job for being transparent in the space. They are listing companies that have track record in terms of finance, in terms of risk management. So they do they are not a regulator, but they took an independent status of listing firms that deserve to be listed, because they have like a compliance type of process that you need to go on. So Profimatch is doing a good job to put the transparent players in the front so traders can choose them. But in the opposite side, you have traders that say, because they are listed and because they have cash, or because they are reputable, so I will go to them directly to
try and game them?
Yeah, exactly. So that's actually the friction that can happen. That's really happening.
So like prop firm match on the one hand is a great tool to go find a legitimate prop firm to work with, but at the same time, if you're listed on prop firm match, it's like a catch-22, right?
Yeah, exactly.
Like you could attract these types of people.
Imagine a prop firm that is backed by a broker. Okay, so you will think that, naturally you will say, okay, it's a big broker behind, so they have money, they have resources. Their prop firm cannot do me damage. Okay, it's not like a small company when they need to. They will be, if I game them, the only decision they can say is, okay, we'll pay you. So the more the company have strong resources and they are strong in the background, so people, they will go to them directly to attack. Because if you attack a smaller firm, so maybe they can say, yeah, mate, what you did. So they will be stricter than bigger company that can afford, paying the traders, even they bypass, which is actually what's happened. So when I said the toxic flow is 40-50%, most of them are getting paid actually to avoid the PR, the social media, the black media.
That's unbelievable to me. That's crazy.
Just to give a little benchmark, I think we when at RUBIK we assist companies in risk management. We are managing their risk desk. When we arrived, it was non-profitable company, and then we enter into the data and we see it's not possible. It's like even more than 50% of the flow is toxic, and you need to step by step clean everything, adjust some of the rules, and put away the bad cheaters in the proper way. So that's a really hard game in the background, which is happening. Regarding the risk management dynamics, it's all the time changing. In a matter of month, you will see a new patterns, a new type of approach. And because we have 360 views across different prop firms from different geolocation, we can find all the time a pattern that we see here, that we recognize here, and then we can connect the dots. Risk is all the time changing. So that's what is our strength, I would say. To detect and be proactive rather than waiting that something happens and then you need to increase the price and etc. So the goal is to make the company proactive. When you see something already, a flag, you already take actions. That for the risk dynamics, all the time changing, much more faster than in the brokers.
I could imagine.
And then for the that's mainly maybe you had another point. So we talked about risk management dynamics, and
there was another. Well, I was going to ask you also about the marketing side of it, because I've had other guests on the show who talked more in depth about this, but. Because to me, it seems like on the marketing side, it's also a challenge. There's so many firms that are competing for these traders.
Yeah.
And if you're a new firm entering the market, even if you're an established player who's small to medium, again, things change so quickly in terms of revenue, right? And then how much you can spend on marketing. I wouldn't necessarily say that there's any sort of drastic changes in any kind of marketing restrictions, I don't think, because this is a very interesting segment of trading that that doesn't fall under FCA, ESMA, all this kind of stuff, right? But I guess that ties into firm dynamics in a sense.
Yeah.
Like if you have revenue, then yes, you can take some of that revenue and increase your marketing spend again to try to get more traders onto your platform to buy your challenges and to try you out. And whether or not you're spending money correctly in terms of marketing, that's a whole nother story. Which regions, which channels, all that kind of stuff.
Yeah, in terms of marketing, it's I think the same battle is happening also in this part of the business. It's hard to be today. If you want to innovate in the prop firms, it will take you 6 months, 1 year, maybe 2 years for traders to adapt to adopt your product. So until 2 years, you're already bleeding and you cannot cross your break-even line, and then it's finished. So you need to be innovative in a sense that you're not changing the full scope of how traders knows the prop. Okay, and I know some companies that said at the beginning, I want to come in the prop firm and I want to revolutionize everything. Okay, and when they come, but there are some companies that say, I don't want to be the same as everyone.
I
want to attract new traders that never heard about prop firms, and there are still a lot of traders that never heard about prop firms, and I want to attract their specific traders with a new challenge that will differentiate myself. The thing is that it takes you too long until you get these clients, and then you finish under the table. That's the marketing. You need to still be innovative, but still stay in the scope of offering the same parameters in rules, everything that people knows about drawdown, daily loss, profit target. This is like the main terminology in prop firms. They need to stay in the boundaries for people to understand your product. And if you understand, you're innovative, so they will come to you. There was like a new so the industry starts with I think maybe it will be a question after that, but the company start with a 2-step.
That's on our list.
And then it starts shifted up. Maybe we can well for the question, but marketing is also really dependent of the product you offering,
right?
So you cannot do the same as everyone because you will be smashed by the bigger players. But if you want to do something a little bit different, you need to stay between the boundaries of parameters that and the traders can understand. And if I can give an advice, again, I'm not a marketing expert. I think you have a lot of people that will talk about.
We'll put a disclaimer on the bottom.
But the main goal will be to not trying to make something new. Try to already attack the users that knows what is prop firms. So instead of searching small traders that don't know what is prop firm and expect from them to come into your firm first, that's a mistake. You need first to go into the market cap and the pie of the prop firms and traders, offer them something that can attract them, and then you start from here. And after that, you can see about the new traders that you want to get into marketing. So
makes sense.
That's my point for marketing approach.
Great. You mentioned, we talked about today in the beginning, the barriers to entry to this segment of the industry were very low. But now, I see a lot of parallels with the retail industry, right? I called it the wild, wild west when I was at a brokerage, and things were, revenue was to 200x, etc. We were growing and everything was great. But then again, problems started appearing. certain things started happening with individual firms. Some firms had, let's say, went under and things like that. And I see a lot of that happening today in prop, right? So you have some firms collapsed. You have what I would say payout controversies, right? So traders not happy with not being paid out or being banned or blocked and something like that. And also behind the scenes, I think you would agree, I would say it's operational pressure in a sense. There's so much going on. There's toxic flow. There's traders trying to game my system. Everybody's trying to fight for a market share, et cetera, et cetera. Going forward, do you think that we will see something like or similar to what happened in the retail industry? So over time, we're going to see consolidation. We're going to see, let's say, a number of firms wither away in a sense, or be basically bought out by bigger players, and then be left with still have a prop firm industry, but have it more refined, let's say, maybe in a sense, and maybe not have thousands of firms, but maybe have a few hundred firms.
Consolidation is already happening. You have in CFD, you have the top 5 that are here taking 70% of the market cap in CFD, and same in futures. You have the top 5 names take the bigger part of the pie. So consolidation is already here. You have the big names that are already established. There will always be some new firms. Even you take 1% of the market cap is still a good result, but they will target very specific niche of traders, maybe specific countries, continents, and so on. Regarding the toxic flow, which I think it's really important, before we maybe move to other questions. We were continuing repeating about toxic flow, abusers, but we not talk about legitimate traders that are here really to enjoy the problem challenges and to have a path for being a profitable traders and to learn from the challenges and take it on a proper way. They are being
neglected.
Not neglected, but the platforms have too much work in the background to adjust the abusers. So some of them will, the legit traders will be affected of all this battle that's happening in the background. Some firms will fail and will go under only because of people that try to game, and the people that were legit and are here in the crowd, they will lost also. So this is why responsibility need to come at some point. I'm sure we're going to see some consolidation, new type of roles in big firms as well. I think that's the next question, but product need to evolve in a way that toxic flow can be diminished, so then the legit traders can enjoy and not be affected by all of that. That was an important point.
You also argue that static two-step evaluation are structurally fragile. If you were launching a prop firm from scratch today, what would your model look like? How different would it be? And what elements of the traditional challenge system would you completely avoid?
So it would be everything aside the two-step static program, which was the first challenge offered by FTMO, then all the companies start to copying. It's finished. Done. FTMO is surviving in this challenge. Again, I'm taking a external angle of what's happening into the big name, into FTMO. They have so much volume, that it's hard for them to see what's happening, because they are at scale.
Yeah, of course.
They can still survive in this type of program, but it's only them and maybe another big brand. If you're new, you cannot open a prop firm using a static, I would say maybe not two-step, but static type of drawdown. One step also can be arbitrage, and two-step is a not profitable product for a lot of companies. And if companies are offering this product, they will be extremely hard on the risk management side, because most of the flow coming will be toxic flow. So either you have a two-step static, but you need 10 guys in your risk team to hear and there and detect and ban and communicate. Or you basically don't offer it. avoid the hassle and go to different type of model, which we see recently. You have instant funding, which like you can directly start trading an account when you can get payouts, but there is a consistency score, so you need to trade on a proper way. This program also start to be gamified a little bit more. We are still at the early stage, but we are already seeing some way to gamify the instant funding. So there will always be a dynamic evolution in the prop firms.
Sure.
That the product will all the time change, all the time adjust. So two-step, if you want to open a prop firm, don't open with a two-step. Go with something different. Go with the instant funding, trailing drawdown, consistency rule. So a lot of jurors say, yeah, but the two-step static is the best program, but not anymore.
But in
the
what
you
say they say it's the best program in what way? Like, how is it the best program for
I
revenue?
don't think, I think it's the best program because it's easy to game again. And I think if a legit traders come in, you understand a two-step challenge was also hard from when you look at the program. It's hard. You have two-step to pass. The thing is that you have a static drawdown that don't move, so it's easier to manage. Trailing drawdown is a little bit hard to manage when you're traders, but two-step static is still hard. You need to do from the standard is you need to do 10% in the stage 1, then 5% in the stage 2. So you need to do 15% overall. While if you start in an instant funding account, you have no profit target. You can be profitable after 3%, 4%, which after a month, 4 or 5% is already a good achievement.
I would say so. Yeah.
So. Yeah, two-step static is good.
Do you think that evaluation models themselves will also evolve?
Yeah.
So outside of let's forget about two-step and let's forget about the instant funding. There will be an evolution of evaluation models going forward, right?
Yes.
I mean, it seems to me like they're going to get more complex, both for the trader and both in terms of risk management for the firm, right?
Yeah.
But ultimately, don't you think that traders are themselves getting more and more sophisticated anyway? I'm not talking about the groups of cheaters and syndicates, to say. I'm talking about the legitimate traders. They're also getting more and more sophisticated.
Correct.
I mean, they have lots of AI tools that they could use for their own purposes, right? And signals and all this kind of stuff. So, I mean, do you think like... Because in my mind, it's like we talked earlier today about, challenges are getting more difficult, making it too difficult for the prop trader, right? And I argue, okay, but at the same time, they're getting more sophisticated themselves. So maybe today you won't find too many people entering those kind of challenges or those kind of valuation models. But over time, in the next year, 2 or 3, as things get even more advanced, the traders are going to be more savvy themselves. And they're going to want to try your challenge.
I think in CFD it's already happening. The first firm starting to change the rules a bit in CFD is Funding Pips, which recently they launched a prime. I think it's named the prime, when basically after a specific amount of payout, you will be moved to live. Okay, so it's a way that if you are being more sophisticated, you cannot trade anymore a simulated environment account, and you will be put in basically a live account that the company will need to manage. So that may be a transition, which futures is already in that perspective, because futures traders are more sophisticated. And the futures space already understand that if you have someone really sophisticated that trade very well, it will need to be put in the live market. In CFD, everything is not really transparent. You can stay in the simulated live account, simulated funded account for a long period of time. And the company don't have any tool to protect themselves. And again, the main issue is still that they need to handle a toxic flow, because at some point, I think if they have an equilibrium between decreasing in toxic flow and other more legit traders, the balance will be okay to go in the market. But when the toxic flow is too high, it's like 40-50%.
That's crazy.
In my opinion, you cannot handle a light transition to the market.
I like your, what you just mentioned about funding pips and having this like, no, sorry, you can't trade the simulator anymore. You have to go into live.
Yeah.
You're not a child anymore. You're an adult. Go trade the live markets.
Yeah,
which makes sense.
Yeah,
it makes sense to
it
me.
Makes sense.
It makes sense to me. I'm a layperson sort of in trading, so that would probably work for me because I would always be like, no, I'll just continue trading on the demo. I'm not gonna. No, I don't want to do the live.
I think you can choose. I think they can. You can decide if you want to go in live or if you want to stay in the simulator. I think they offer this. Yes.
If we look 5 years ahead, what is going to be the real competitive advantage for a prop firm 5 years from now? I mean, what is it?
Yeah, it's
is it the evaluation and the challenge model? Is it have a ton of capital set aside for a rainy day?
Yeah.
What's it going to be?
It's risk management.
Risk management?
Risk management.
Yeah.
That's the number one. Of course, you need traffic and marketing, which makes sense. You don't need too much capital to survive. I think you don't need capital like a broker, but you still need some resources to be able to spend ads in campaign. But yeah, in the next few years, the companies that will survive, and I already debate about it in different articles or public opinions. Risk management. Risk management is the key to survive in the prop firms because it's all the time evolving.
Yeah,
it's very dynamic, and when you're stuck, when you're locked into your own company, you don't understand what happens aside.
Yeah,
and I think it's opened my eyes. Yeah,
right?
When I was at the Fivers, I was only looking what's happening in the Fivers. So okay, I try to handle what's going on into one firm. But the real toxic flow is basically when you can create a strategy to arbitrage between everything around.
Yeah.
So when I stepped out and start to giving consulting for a few firms and then understanding the correlations, say, okay, here it's a full Casa de Papel plan, to game and bypass the challenges. So you can look at what's going on only when you are a little bit aside and not in one stack in one company to understand what the new dynamics in risk. So risk management again is the key to survive, in my opinion.
That makes a lot of sense. I guess my last question that I want to throw out to you, given everything that we've said today, do you think that there's actually firms out there that understand, they look at their business and they understand that long term this is unsustainable, but they just continue running the company and continue to run the business because the conversion still works and the funnel still works, and they're just like, okay, well, we'll just keep this going. But ultimately, we understand that 5-10 years from now, this is unsustainable. This won't work.
Think so. Yeah. I think so. There are firms that there already a few years back when MetaQuad shut down.
Yeah.
Few firms were already in this situation that they knew that maybe the next year, 2 years, 3 years, cash will be gone and you cannot be sustainable. But the thing in prop firms is that every 6 months, every year, something change. So you can all the time change a little bit the direction, navigate, and be able to survive. So it's like a survival mode for some companies. It doesn't mean that after 5-10 years they will close, but they will all the time find a solution or new dynamics or new type of challenges to make them survive.
I guess something that we'll discuss in another podcast is, well, what do we do about this? Because a few years from now, if there are changes out there to the industry and certain firms do start, let's say, disappearing, I guess what happens to the traders? You know what I mean? In a sense, again, it's not a retail firm where you hold deposits, but at the same time, I mean, people paid for challenges.
It's happened already,
right? It's happening already, but I'm just concerned about it happening on a much more massive scale and kind of, okay, well, how do we actually at least somehow try to protect the traders? You know, because if we don't, they're just going to leave. You know what I mean? They're going to have a really bad experience. They're going to be like, it's like a bank that just went belly up and I can't get my money out in a sense, you know? So, but that's something for another.
Okay.
That's something for another.
I'll book my flight for Limassol again next time.
That's for another episode. Well, Ruben, thanks for coming on the show today, and thanks for taking the time out of your busy schedule, both personal and work. Good luck on the panel at IFX, and it's always a pleasure to speak to you about the prop firm industry overall, and specifically your niche, which is risk management. Hopefully the toxic flow can be managed, handled, and be put under control. I'm amazed that it's so high, and hopefully it gets managed for the better of the industry. So this all keeps evolving as best as it can. Thanks so much for coming on the show.
Thank you very much. Thank you.
Cheers.